What's up, YouTube family? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and I'm turning your financial problems to dust. We are back with News with Money Mike. This is where I basically take a look at the financial news in the world, talk about how it could possibly affect your pockets, and make you a better informed consumer slash just person understanding where the money could possibly be going. So what we're going to do is we're going to take a look at a couple articles here on Yahoo Finance and basically see what's happening in the news, get my reaction, and also I hope to get your reaction. So don't forget to like, follow, and subscribe to my channel. Also hit that post notification bell so you know exactly when I drop new content, because you don't want to miss what I'm talking about. But without any further ado, we're going to go ahead and check out this video and check out these articles. So if y'all ready, I'm definitely ready. Let's go.
On the night I was born, the rain was pouring, God was crying, lightning struck, power outage, sparks was flying, the real one's here.
All right, so we are on Yahoo Finance now. This is where I go again to check my news. So what we're gonna do is we're gonna go ahead and check it out together, see what we can see, and make some informed decisions here. All right, so let's see here. Central banks, the Fed expected to hike rates one more time in 2023. Let's take a look at that and see what that has to talk about here.
Well, following the European Central Bank's rate hike to a record 4%, economists are anticipating that central banks are near or at their peak. Here with what we can expect from central banks this week is Yahoo Finance reporter Ines Ferre. Hey, Ines.
Hey, Rochelle. Well, let's start with the Fed. The market anticipates that the Federal Reserve is going to hold rates steady at the conclusion of this week's meeting, but it's leaving the door open for one more rate hike this year. Now, a Reuters poll shows about 20% of economists expect one more rate increase this year. Of those polled, a majority saw rate cuts sometime next year. Now, Fed Chair Jerome Powell has repeatedly talked about higher for longer, meaning that the markets may have to get used to the idea of staying at the current Fed funds rate level for a longer period of time. And one of the Fed's recent forecasts doesn't see inflation coming down to the 2% target until 2025. Now, several other major central banks have been following the Fed's lead in order to combat inflation and protect their own currency, by the way. The Bank of England is likely to hike interest rates one more time this week, possibly the last one this year. Both Citi and Goldman Sachs believe this Thursday's decision will be the last hike for the BOE. Meanwhile, last week, the European Central Bank hiked its key rate to a record 4%. The increase was accompanied with a statement that read in part that rates are at levels that, if maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to the target. Now, Deutsche Bank analysts don't see rate cuts for the ECB until at the earliest September 2024. And one of the challenges for getting inflation down, of course, are oil prices, which have been on a steady rise for the past 3 months, on pace for their largest quarterly increase since Russia's invasion of Ukraine last year.
All right, so our first article is talking about an expected additional hike of the Fed rate. So just to kind of give some perspective on what's happening, the target rate for inflation is 2%, meaning prices, things like that, are going to go up at a gradual rate of about 2% a year. So obviously we know that inflation has actually gone up higher. The reason for that is because of the record low interest rates that we've had over the past decade, you might as well say. This is what causes inflation. Anytime you put more money into the market than is actual necessary, anytime basically it's easier to get access to money, you're making the demand basically lower. So now that's what basically is now making inflation go up, is because you have to have a balance of these rates. You have to have a balance of the supply versus demand in order for an effective basically economic situation to happen. So what's going on right now is, in an attempt to bring rates back down to that 2% of inflation, they're going to have to basically rise prices of things for a little bit longer in order to, I guess, find that fair medium. So what this means for you is that prices obviously are probably going to go up, and it's probably going to be like that at least at least for another year. So what I would do to plan around this is basically to understand prices are going to go up. Maybe kind of take a look at, okay, how much of particular items do I need? Do I need to make big purchases right now, or can I hold off on those things?
Next.
Okay, Tesla price cuts to weigh on earnings. Okay, so let's take a look at this here.
Because shares of Tesla, they're off just about 2%. Goldman Sachs lowered their profit forecast for the EV maker, saying that recent price cuts are likely going to weigh on overall profits, something that we've talked about now for several months. With Tesla, there was also a report out from the Wall Street Journal saying that Tesla is in early talks with Saudi Arabia to set up a manufacturing facility in the country. Now, that is according, like we just said, to a report here from the Journal. Let's first start with what Goldman has to say, Brad, about Tesla, because they're echoing what many analysts have been warning about now for several months. Musk and Tesla have lowered the prices numerous times on their vehicles. It's going to pressure margins here, at least in the coming quarters. They're doing, in theory, to boost demand for their cars. Whether or not that turns out to be a good move, we'll see by the numbers.
Yeah, and I think for what we're looking for from Tesla at this point in time, and we got to remember for the broader EV landscape too, that there's so much investment that's being put forward in meeting some of these lofty goals, whether it's Ford or GM. But for Tesla and the head start that they do have right now, it's about making sure that they secure their ecosystem. And so with that in mind, what does this ecosystem look like? It means getting people into a Tesla vehicle, whether it be mass model or perhaps getting them to matriculate, if they're already in a mass model, up to one of the higher end, more profitable, the S or the X, even though the lion's share of orders are the 3 and the Y at this point in time. And so that being really their approach and making sure that you get people into the brand to start off and then layer on some of the other services, some of the other kind of,
Okay, for this one, honestly speaking, I've actually seen enough of this article to understand where they're going with this. Okay, so basically Tesla, in an attempt to increase demand, another supply and demand situation, in order to increase demand for their vehicle, they're lowering the price. Now, for Tesla, it's kind of good, but I guess Goldman Sachs is saying, okay, for their investors, it's looking for their investors' sake. When you lower the price of something, that means that these investors are losing money. So anytime you lose money, investors lose money, obviously the stock price is going to go down because, you know, obviously they don't see profit. They're seeing profits go down, and basically investors are saying less people invest into that particular thing, and it causes the share prices to go down. But you got to look behind all this and see what it's really saying. What it's saying to me is much like what he was talking about, is by lowering the price, you're increasing demand because now more people have access to this vehicle. A lot more people are going to get a Tesla now because it costs less. Now, the point of that, the reason they're doing that is because now, once that demand gets really high, then guess what? They have to now make less of them in order, to be able to keep up. Like the demand gets once the demand gets too high for them to manage, now what they're going to do is they're going to start making less of them. But because now there are less of those vehicles, that price is going to go back up. So yeah, you might see a small dip in the stock, but overall, trust me when I tell you, it's going to be a small little dip and then it's going to push back up. So if you want a Tesla, you might want to go in and get that thing now. That's what I'm going to say on that. Get you, a Model 3. I like Model 3s. I've driven a Model 3 before. They're awesome. I would get a Model 3. Now, if you got a bigger family, then maybe, but I honestly don't see the need to get a bigger Tesla. I mean, that's just the honest to God truth. You probably can find a better priced vehicle in these other models, these other brands. Especially if you got a family, you probably gonna need like an SUV or something like that. So Tesla is probably not gonna be something you want to look at, to be honest with you. So that's my take on this particular article. Let's go ahead and jump up out of this one and let's try to find one more for y'all.
Next!
Let's take a look at this. Lyft to pay $10 million civil penalty over disclosure failures in the SEC. I'm interested in this kind of because I'm an Uber driver, so Lyft is kind of like a rival company. So that's the interest in it. You know, that's what kind of sparked my interest in this. And also, we're looking at a company paying a fee to the SEC. Anytime you start paying money to the SEC, it's because you probably done violated some kind of law or something like that, which businesses honestly do this a lot. So this isn't like new news per se, but it's things that you kind of want to be informed about. You want to understand because it could affect the price of stock and things like that. So let's take a look at this article and see specifically what they're talking about. Lyft has agreed to pay $10 million to settle Securities and Exchange Commission, which is the SEC, charges it failed to disclose a board member's financial interest in a transaction involving the company, the U.S. regulator said on Monday. Prior to its public listing in March 2019, a Lyft board director arranged for the sale of $424 million worth of private shares through a special purpose vehicle affiliated with the director, the SEC said in a statement. Lyft did not disclose this information in its SEC filings for 2019, said the regulators, who did not disclose the director's name. Okay, so we don't know who did this. But representatives for Lyft, which did not admit or deny the allegations, of course not, did not respond immediately to requests for comment. Of course not. The SEC said that Lyft was required to report details of the transaction because Lyft, which approved sale of the private sales, was a participant in the deal. The director left Lyft's board at the time of the transaction, regulators said. Oh, this looks really bad. Like, it honestly looks really bad. But what he did is sold a bunch of shares to whoever, he or she, I don't, because they won't disclose who the director is. He sold this, and now SEC caught wind of this, and the person is set to pay $10 million through this. I don't think it's equitable for what happened. You make $424 million and you only have to pay $10 million of it. Hey, I'll do this all day. I ain't gonna lie to you. I would do it all day. So there we have it. We took a look at inflation, probably going to go up one more time in this year. We took a look at Tesla and their stocks prices possibly being affected. And we looked at a little bit of dirty news from Lyft. From their director here, kind of taking a little bit of cheese off the top and giving a little bit back just to keep things looking kind of clean. So, all right, y'all. So we have taken a look at 3 stories today. We took a look at the inflation rate possibly going up one more time due to whatever, them trying to get inflation back balanced. We also took a look at Tesla and their stocks having the potential of going down due to the decrease in prices, which to me, I'm like, okay, like it's a big money play. And last but certainly not least, Lyft is in a little bit of hot water and giving out a little bit of money because of some private sales of shares before the company became public. And that's a big no-no according to the SEC. It's almost points to insider trading, but I don't feel like the punishment really fit the crime, because I mean, you made off of 400 million, only had to pay 10 million. I keep talking about that, but it is what it is. I just want to keep you guys informed of some of the things that's going on out there. I hope that you guys enjoyed this video. Make sure y'all like, follow, and share, and I will catch you guys on the next one. And as always, I love you. God loves you. He smiles when he sees you, and he sees you all the time, so he's always smiling. So aren't we? Hey, don't forget to like, follow, share, and catch me on the next one. I'll see y'all next Monday. God bless each and every one of you. Gone.